Welcome back. Well, for the markets, it's quite quiet at this point in time. We have the Bank Nifty. Like I mentioned, the financials are underperforming today, so down around 0.6% currently for the Bank Nifty. Advanced decline ratio as well is currently at around 1:2 on the declining side, so favoring the declining stocks at this point in time. But let's talk about defense, because that seems to be the big theme that is playing out. As of 2024, India is the fourth largest defense spender in the world. India aims to become the third largest defense spender globally by 2047, following US and China. To talk more about the opportunity in the defense sector, we have with us Mr. Ashok Atluri, who is the CMD of Zen Technologies, joining in on the show now. Mr. Ashok, thank you very much for taking the time out and speaking with us. Well, if you could just start by giving us a sense in terms of the near and the now. Is there any sort of incremental increase in terms of, say, order inflows, queries just in the past couple of weeks, based on, all the geopolitical developments which have taken place in India itself?
Yeah, I think we are waiting for the government of India to, give us instructions on what to do, what actions to be taken. We are completely on standby at this point in time, and the government is, seized of the matter, and they are having discussions whenever they require anything from the industry. Not only Zen, but the whole of industry is absolutely alert and on standby.
Yeah, that they are on the standby, Mr. Atluri, but the thing is that, typically if and when these things happen, they don't, immediately amount to any sort of business from a defense company standpoint. The street is abuzz with maybe perhaps increased orders, etc. for the next couple of years, stray incidents notwithstanding. We'll keep an eye out on what takes place in terms of immediate developments at the border. But from the defense industry standpoint itself, if you could give us a sense of, what sort of ordering activity have you seen for the industry in the last couple of quarters, and what kind of execution lies ahead for players like you and others?
Again, we said that, we are expecting, last quarter we said that some orders we were expecting the first quarter. Our expectations still remain the same. But overall, even the industry is, it's a very, very positive vibe at the ground level. And we think a lot of orders are going to come the way of the Indian industry, we can feel that, and we are interacting with the government. And I think to your answer, the answer is the vibe is very, very positive, and we expect orders to come through to the Indian industry.
So you, I remember, had said that by the first quarter FY26, you would have 800 crore worth orders coming in. You still hold on to that. Is there a possibility of a delay there?
So I had said for the first half, I had said that we should be having 800 crores. Yeah, there is no revision in that expectation.
Oh, okay. Just give us a sense in terms of, you have closed the year with a record profitability as well as an order book. Do you expect this kind of momentum to continue for the next couple of years? Give us a visibility, probably not only for the next 1 year, but what might be the 5-year plan for the company in specific and the vision that you might have?
What we projected in the past is that in the next 3 years, of starting FY26, 27, 28, we would be getting orders worth about 6,000 crores. And we should be, able to execute them. So that's our expectation in terms of the next 3 years. And so, there may be a difference in a year, there may be a dip in a year, but, overall, I think we are on track to achieve that CAGR of 50% that we have been saying. On an average, that should be achievable.
And financial year FY25, you will end with that 900 crore guidance. Qualitatively, you can say that, right?
We haven't revised that guidance at all till now. So,
got it.
Yeah.
And what about you reducing the gap between Zen and the acquired company's margins? Because you had made a couple of acquisitions earlier as well, on which we had this conversation on the channel. You said that going forward, you will reduce the gap between them. By when do you expect to do that? And what is your margin prognosis for FY26?
Most of the companies, for example, our naval simulation company, the marine simulation company, is focused on the marine market. Now, within the shift to the naval market, I think we'll have better margins, not only in India, but globally we'll have better margins. And we expect the alignment to take in the next couple of years. So I think by FY27, 28, we should be completely aligned.
Okay. What is your sense in terms of R&D? Because you have been investing, I think, around 80 to 100 odd crores in terms of research and development. What was the total investment that you can share with us as of, say, even the 9 months gone by? And what are you targeting when it comes to the next year odd? And how would it probably play out in terms of a P&L, say in terms of sales or say in terms of EBITDA?
In a couple of years back, we were doing about 20 crores. Now I think we're slowly moving towards 50, 60 crores kind of thing. Again, it is not as a percentage, but as an opportunity that we get something, we think that it has a large market with the Indian Armed Force, we invest in that. So I think the EBITDA margins, again, we have been saying that EBITDA margin, we expect to be around 35%, and that has not been revised. And again, on the PAT margins, we want to hit at least 25%. So that's what these are the two things that guiding our decisions on more and R&D. Again, these margins are possible only because you have tremendous amount of IT investment that you already done over the hundreds of crores over the past few decades. So they are now paying off as with we compete with the world's best companies, but still we are able to maintain these margins.
All right. And the drone opportunity, if you could give us a sense on what your market share currently is, what are the likely orders one can expect over the next couple of years from the industry standpoint, and how much are you likely to win from them?
So in terms of drones, we are just, we have acquired a company called Vector Techniques. They are big into the drone ecosystem, and they will be supplying the motors, the other part, the controllers, etc. So we are really completely aligned, and we are trying to build up their capacity. That was the whole point of the acquisition, was building the capacity so that we can become an essential part of the drone ecosystem. So we will probably be giving those numbers in the when the earnings call come, exactly what will be the kind of expectation from the turnover from those companies.
Okay. You also won an order recently, I think it was on the 27th of March itself, just about a month ago, for the air defense combat simulator for the L-70 gun. I think it's worth around 150 odd crores in terms of an order. Tell us about what the pipeline is looking like in terms of incremental order inflows within this particular segment and how lucrative it might be.
That IADCS is Integrated Air Defense Combat Simulator. So that's for the L-70, which is a weapon that's used worldwide. I think there are about at least 40 to 50 countries that use this. So we were able to make a simulator for this, and it's very, very effective in terms of, instead of sending missiles worth lakhs and crores of rupees, you're actually getting the same kind of practice without using anything. So the demand for this is very huge, not only in India, but across the world. And, again, we think that there are similar kind of products that are there, and other air defense systems that we can make a simulator for. So there is the buying narrative is very, very powerful, that, the savings are immediate, so they can see the benefit of the simulator. Unlike some places where people say, where is the benefit? So yes,
okay.
Yeah.
Well, just taking that point forward, exports now comprise of how much of your order book? It was around 35%, say, a year, 2 years ago. How much is it now?
30 to 40% of the total turnover, yeah.
40%. And when you talk about exports and when you talk about the kind of demand that you're seeing globally for these kind of products, what is the kind of order inflow that we expect on the export front?
Again, we have been saying that between 30 to 40% is going to be exports. I think we will be able to maintain that ratio on an average in the next couple of years also.
All right, we take that point. Thank you so much for joining in. Just once again, if you could revise your break-even point for us, because your business is such that once you hit the break-even point every quarter, the rest, flows onto the margins itself. So if you could revise that for us.
Yeah, I think I'm definitely not going to, immediately say that, but I think it used to be about between 100 and 150 crores that we have crossed long time back. So
execution you do goes straight to the margin, to the profitability. And what do you intend to do in FY26 in terms of execution?
So what we have said is this last year we have said 900 crores, and we have said next 3 years we expect a CAGR of 50% on an average. Some year we may down, but next year we'll make it up for that. So we stand by that prediction even now.
All right, take that point. Thanks a lot, Mr. Atluri, for joining in and giving us an update on what's taking place in the defense sector. Defense stocks have been in focus for the last few trading sessions. But with that, we'll step into a short break. Before we do that, here's some good news. Network 18 has beaten Times Internet to become the #1 news publisher on ComScore. News 18 races past the Times of India to be the #1 news brand in the country. That's not all. Network 18 is also the #1 digital network in the news and information category as per ComScore report of March 2025. News18.com has 38% more users on native and social platforms than that of Times of India. As per ComScore report of March 2025, Network 18 is way ahead of the Times Internet with over 55% more internet users on native and social platforms.